Hello to everyone. Today I am here with Introduction to Corporate Finance, Financial Planning and Growth, Part-7. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. In this session, we are going to discuss what determine growth, the sustainable growth rate in sales, uses of sustainable growth rate, increase the sustainable growth rate. What determines growth? Firm forecast growth on exercise part of the financial planning. Firm focus on shareholders' wealth maximization, often expressed through the net present value creation. If the net present value is positive, it means your return is more than your expected return. If net present value is negative, it means your return is less than to your expected or the discount rate. One way is to reconcile the two is to think of the growth as an intermediate goal that lead to higher value. In case if the firm is willing to accept the negative net present value, means less than its discount rate, project just to grow in size the shareholders, but not necessarily the managers will be worse off. Here we have seen a picture related to negative net present value. There is a linkage between the ability of a firm to grow. On one side, we have the ability of the firm to grow, and on the other side, its financial policy when the firm does not issue equity. Funds requirements are met either by issuing the equity or to index the debt. The sustainable growth rate in the sale is given by change in the sales, present sale and the projected sale is to S0 means initial sale equal to profit rate multiplied by 1 minus dividend multiplied by 1 plus debt is to equity. T is the ratio of the asset to sale minus profit multiplied by 1 minus dividend multiplied by 1 plus debt over equity. So it is the formula in order to calculate the sustainable growth rate in sales. Sustainable growth rate in sales. The sustainable growth rate is used as measuring the comparability between the sustainable growth rate with the actual growth, provided there is balance between the growth and profitability. Many times it happens, or sometimes it happens with the growth having the adverse relation with the profitability. Sometimes they have growth having the direct relation with the profitability. The formula, same formula is reproduced here. Use of the sustainable growth rate. A commercial lender would want to compare the potential borrower's actual growth rate with their sustainable growth rate. It's the lender's requirement that what is the proportion of actual growth rate is to sustainable growth rate. If the actual growth rate is much higher than the sustainable growth rate, the borrower runs the risk of growing broke. And any lending must be viewed as a down payment on a much more comprehensive lending arrangement than just one round of financing. If we can have a clarity, what should be the proportion between the actual growth rate is to sustainable growth rate. If the actual rate is higher, there is a risk. If there is optimal relation between the actual growth rate and the sustainable growth rate, the risk level will automatically reduce. Increase the sustainable growth rate. There are some measures that can be taken in order to increase the sustainable growth rate. A firm can do several things to increase its sustainable growth rate. Sell new shares of stock. It means generate funds through equity. Increase its reliance on debt. Here one question arises. Debt is good or bad? If the debt is generating against the revenue generating assets, those debt assets will provide on one side incremental cash flows and on the other side tax shield, and it will help to grow the sustainable growth rate. Reduce its dividend payout. It means maximum part of the profit you reinvest within the business as retained earnings. Increase profit margins. Profit margin can increase by reliance on the debt as well or by other means. Decrease its asset requirement ratio. Now the asset requirement ratio can also manage. For example, the asset to non-revenue generating assets should or can be minimized, like luxurious vehicles or luxury office setups. So these assets requirement can decrease in order to increase the sustainable growth rate. Thank you very much. See you again with the upcoming video on the topics related to the banking and finance very soon.